Well, I will make a little bit of small talk here before we get started. Happy Friday. Uh, Looking forward to getting into a little bit of the week that was. We'll still call this our little Friday huddle up here, talk about the markets, but more importantly, talk about our thoughts on things going forward and kind of how we see some likely scenarios starting to unfold. But first, I'll give you a little beard update. Here we are in May. I can say with a high level of conviction, I don't think the beard will make it very long into May. I think I've tested my wife and daughter's patience a little bit with it, and so I think I will call on my son to allow me to heavily trim, or possibly even abandon the beard altogether. It's definitely driving me nuts. It was a fun exercise, definitely the longest I've ever gone. Didn't think I'd get through the month of April, but I did. And so so that's the first thing. Second thing is, obviously, month of April now has given way to May. Brutal March, very nice April. And one thing we do is we talk about our positioning in general terms, because those of you who own the strategies that we have will know, because you'll be able to see it on a real-time basis. So it wouldn't surprise you that our continued mode is one of caution. And I'll give you a couple of things to think about for how we're looking at the next 6 months. So 6 months from next Tuesday will be a presidential election, right? So crazy in the midst of all this that we're going to go through this all again in terms of a presidential campaign into an election without any, it doesn't take a rocket scientist to figure out. One side will say, you've mishandled the whole pandemic and countless people have died as a result. The other side will say we've done it perfectly, and instead of 2.5 million people dying, we're going to end up with less than that, but a lot of people. So it's going to be a lot. Underneath all of that is companies having to operate in this environment. This is obviously clearly a unprecedented dislocation of commerce in the world, but particularly in America. And I think it's a little bit underfelt in our particular geography, because I think, I would say the Bay Area maybe has held up, quote unquote, held up better than a lot of places, but we work with a lot of business owners as our clients. They're mostly interested in whether their PPP money is in to buy them a couple more, months before things get really catastrophic. And we've listened to call after call after call about how companies are responding, and a lot of the companies that, even some of them that we own, work with the small and medium-sized business market. They're very concerned that a lot of these companies, aren't going to be in any position going forward to continue to function as they did. So one particular thing I'll point out, and again, my goal on these Friday roundups is to keep them short. And obviously you can see the screen is red. I think it's very important that you look at your you look at your account on days like this to see where your positioning really is, because the level of caution that we have instilled in the portfolios is designed to weather these, this tumultuous period. So I'm gonna talk about one specific example of a company this week, and then really get into the metaphor of how we're going to continue to play this out. So Chevron's earnings were interesting because they announced that they're going to continue to pay the dividend, and obviously they're continuing with to pay their employees, but they've reduced their capital expenditure going forward by a lot. So if you think about a company and what they do, and the sort of the mouths that they feed, right? The dividend feeds the shareholders, and the paychecks feed the employees, and the CapEx feeds the companies that sell the equipment to Chevron to go out and produce more food to give to everybody. So when you cut the CapEx down a lot, it sort of chokes out that group of companies that depend on companies like Chevron to survive. And so it ripples through. And a company like Chevron does that when they don't see the demand for their products returning in a meaningful way in a short order. They don't view that as a good investment at this time to continue to invest in the growth of their business. So they cut that, and they keep feeding the shareholders and they keep feeding the employees, but obviously it's not a growth mode. So that that ripple gives us a high degree of caution as to how we ought to be positioned going forward. We are not believers that this is a business as usual, we're going to get back to normal anytime soon. I've used this metaphor many times, which is we view the positioning of the MLS like a poker hand, where outs are important and more outs are better than less outs. So I'm going to add yet one more layer to that metaphor, which is this market and our positioning within it is a little like the World Series of Poker. So to win the World Series of Poker, which is 51 straight days of world-class high-grade poker, you have to have great strategy, you have to have a little bit of luck, and you have to have immense concentration over 51 days. You space out one day and you're out, or your chips are demolished. And so concentration over this next many months will be key. So it brought me to a little analysis that I did, which is I started in this career December of '92, and studied up and got licensed in '93. So whatever day you want to track it from, somewhere in this quarter, Q2 of 2020, I will cross over 7,000 days, market days of doing this job, right? Markets open 252 of the 365 days a year. So quite literally, every day the stock market's open, this is what I do. And so we've been doing this for a long time. As we've talked about before, having our interests aligned with all of you is core to why what we do, I think, is going to be very successful. And so on that note, concentration we have in spades. We're well prepared to play this long game. We've talked about this before with regard to the hedges that we have on. We have a process by which we will lighten them as if May looks more like March than it did like April, then as the month rolls on, we'll start to pull some of those off. But as of yesterday, we added, right? So we even added to the hedge, which is a simple way of saying controlling the downside if the market's going to be continue with downside volatility. Nobody minds upside volatility, but here we are, another 3% daily move, vicious, lower amplitude. So that's the playbook, and it will continue to be the playbook. I'm going to keep talking about this narrative on Friday because, in my opinion, if we're right, this will be the thing we're talking about for several, if not many months. But on the flip side of this, like now moving on to another metaphor, like the forest fire, there will be interesting investments and winners coming through this, and handicapping it around the election sometime this summer. I think we're going to have a whale of an opportunity to reestablish positions for the next cycle, and as we did in the last one, and I think that will be a very prosperous period post that, which is not here yet in our opinion. So with that said, hope everybody's safe, hope everybody's continuing to enjoy their family time. As I said, by the next time you see me, probably aren't going to see the beard, or you're going to see a greatly reduced version of it. But in the spirit of keeping it snug on a Friday, thank you for joining the Huddle Up, and we will talk to you on Tuesday. And I haven't quite figured out who we're going to talk with, but there will be somebody with me. So thanks, everybody. Have a good weekend.